Well, thank you to all of you, to LP, and to those who made that interesting and unusual introduction. I don't think I've ever been introduced quite like that before. But on the other hand, it's a strange sensation standing here today in a place where I'm on your right and on your left, or the other way around, but there's no one in the middle. But I will be here soon. Now, my job is I'm a futurist. I'm not quite sure what that means. I guess it means that, like you, I think about the future a lot, but maybe even more than most. I work with the boards and senior teams of some of the largest multinationals. On the one hand, it might be people like Google, Microsoft, IBM, Hewlett-Packard. It might be with their client meetings. It might be internal meetings like this one. It could be workshops, seminars, whatever it is. Everyone is thinking about the future, and not just IT companies. BP, ExxonMobil, Shell, Credit Suisse, ABN AMRO, Barclays Bank, yes, RMB. All of us, all the time, are required as part of due diligence to consider what tomorrow might bring. And I often say this: either we take hold of our future, or the future will take hold of us. Either we see the future as just a whole load of megatrends and uncertainties rushing towards us at 100 miles per hour, or we see the future as a combination of human innovation, creativity and other things which actually develops our world in business for us. It makes the difference between success and failure, and we write our own history. Now, I happen to think it's both. On the one hand, we look at the trends. On the other hand, we look at innovation, creativity and making some history happen. So let's start by looking at some of the trends. Before we look at the fundamental structure of the future, which I spell F-U-T-U-R-E, as we'll see later, I want to look at wildcards, these low probability but potentially high impact risks that can come crashing into strategy. These are perhaps 1 or 2% risks per year, the kinds of things which are often perceived to be downside, but actually often have a real silver lining for those that are agile and innovative enough to seize an advantage and move and capture that new developing need that has come as a result of this particular event. The fact is that there are many more wildcard risks than most organizations think. There may be several hundred, in fact, inside your own organization, and you can do the math. If each one of those has a 1% risk per year of going off, then the risk in any year, or the likelihood in any year, of these things is about, well, you know, it's almost 100%. 300 of them, 1 or 2 or 3% risk, it's there. And you can go for years without any of them happening, and then find 10 or 15 happen in a very short period of time. And this is so whether you're running a government, whether you're running a multinational corporation, whether you're running a large hospital, it doesn't matter what it is. But these wildcards are interesting for one particular reason. If we look at human history, we see that the real impact of wildcards is often shaped not by the event itself, but by one word. There's one word which is more important than technology, than banking, than megatrends, than just about anything. More important than some news item, it's emotion. It's the reactions to the events rather than the events themselves. The earthquake was hardly mentioned in the world media. The tsunami was hugely mentioned. Yes, I know it was a great big event, but on the other hand, the fact is that the Pakistan earthquake touched very few people in the West because there were very few people in the West who had relatives, family members or friends in that area when it happened. Unlike the tsunami, where there was vast numbers of holidaymakers who were all busy SMSing and the rest. So we begin to understand that if we want to see the future more clearly, we need to look beyond the spreadsheets and beyond the graphs. That's why we don't believe market research. Market research can't tell you the future. Market research is simply a collection of comments that your customers tell you about how they think the future will be and how they think they'll feel about it when it gets there. But history tells us that they're usually wrong. To show you an example of this, I've got a video here which I'd like you to watch. It's a TV ad which was shown briefly in my country before it was banned. Why? Well, it scored 10 out of 10 for market research, but once it was shown, there was a massive emotional reaction. I'd like you to have a look at it and try to tell me why it was that this video just had to be taken. So what do you think? I mean, yes, okay, it touches us in all kinds of ways. It was funny. Some people think it's a little extreme, maybe not in particularly good taste. And of course, it's about a particular truth, which is that life is short. But it's an example of the fact that the future is about emotion, and emotion is incredibly important if we're going to take hold of it. But the first phase of the future is fast. It's to do with the speed of change. And the fact of the matter is that our world is becoming incredibly impatient. If your clients spend more than 30 seconds waiting for a web page to load, then the chances are you've lost 30% of your potential trade. Now, you might say that's different for you, but I promise you, if you're selling a basic item in the high street, that is absolutely the truth. Now, here is something else that's curious. I've got a question to ask you, a little bit embarrassing maybe. I'd just like you to put your hands up, confession time. If, when you're waiting in a hotel like this, the Hilton, and the lift doesn't come, and you're late for the meeting, and there's a queue, and you're looking for your watch, and the phone is going, and nothing's happening, confession time. Put your hands up. Yes, please, do. Put your hands up if you, like me, actually press the lift button more than once. Okay. I know you're a little nervous. I just want you to put your hands up. Just have a look around. You see, well, let me benchmark you against a global community of senior executives. The vast majority, maybe 40 or 50%, will press their button twice, 3 times, or 4 times. Why do we do this? We know the lift button won't make the lift come any faster. We know that dear old Bill Gates with Windows XP or whatever it is that's driving the lift technology cannot propel that lift to come, but we still do it. What we learn is that when we're under pressure, when the future is coming towards us, we act irrationally. Yes, even senior banking executives, even executive board members, even the chairman of a bank may act in an extraordinarily irrational way over something that appears so trivial as to be unimportant. Let's look at some examples of trends which have been set there for a very long time for anyone who's paused for more than a nanosecond to think about them. And the issue here has been what weighting you should give to the trend rather than the nature of the trend itself. And I have to say that much of the future is not about what's going to happen, it's a question of simply when. Let's give you an example. The fall of telecom costs towards zero. Okay, so when does it get to the point where all telephone calls are the same price regardless of distance on every phone? We could debate that. The fall of IT costs towards zero. And again, we can debate the date by which 2 billion people have effective online access. Or the increasing problem of aging within the European Union. That's a problem that the governments have known about for the last 30 years. It's a simple function of mathematics. The number of children born in each year, or not born, as the case may be, the population bulge that we've had working its way through different age groups, and hence the problems we have today. Now, we don't need to be a great prophet to have observed that 20 or 30 years ago. It was set in concrete in human history, barring a catastrophe such as a nuclear holocaust in the middle of the European Union, or a massive bird flu pandemic sweeping around the whole world. And again, looking at HIV and things like that, you know, I wrote a book called The Truth About AIDS. It talked about the problem of AIDS in South Africa and projections for what was likely to happen to various different communities across the whole of the region. Now, sadly, those things have happened more or less exactly as I said they would 20 years ago. Is that because I'm clever? No, it's not. It's simply because I did the work. I had a look. And you could give me a number of examples of trends right now that are transforming financial services which you believe are fundamental to the future and will take another 5, 10 or 15 or 20 years to work their way through. What about the cashless society? What about the use of technologies like SMS to replace credit cards, and so on? So when we put these two things together, the megatrends on the one hand, about which we feel relatively secure, but actually need to be explored afresh, and the wild cards, these uncertainties which can come crashing in, then we have a much sounder basis for planning our strategy. And within these megatrends, we will discover many, many opportunities for investment, for business, and for change within our world. So we'll be in for an interesting day, and I look forward to being with you in the flesh very soon. Thank you.